Uh, Good afternoon, everyone. I am C. Ashok Jatia from Bhilwara, moderator of this webinar. I am thankful CP Committee and CP Chairman Satishji sir for giving me this opportunity. We are all delightful to welcome you all to this seminar, which is being organized by the CP Committee of ICI. Please block your calendar on Wednesday and Friday to get insight of various emerging and high-value technical topics. It is my pleasure to be moderator of this webinar on recent critical issue and trends in GST and opportunity for CA professional in Kenya. In short while, we will start this webinar. First, I would like to apprise about the CP committee. CP committee. The profession of chartered accountant is growing leaps and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired indispensable position in the business and economy. ICA continuously aims at developing knowledge so that the members stand out to the expectation of the society. To achieve this objective, the CP committee of ICI has been continuously striving for perfection, integrity, and knowledge, which makes the word chartered accountant synonymous with the excellence in service. In this direction, CP committee has always been proactive in emerging needs of its members, enabling them to acquire contemporary knowledge and skill to face the challenges effectively by organizing CP programs and providing educate opportunities. Today evening program is as follows. We have the two sessions. First is recent critical issue and trends in GST, which will be handled by CA Pulkit Khandelwal from Jaipur. And another topic is opportunity for CA professional in Kenya, which will be the 2 eminent speakers from Kenya, Satya Partiji and CA Kailash Ji Mota will speak on this topic. Our eminent speaker will talk about the above mentioned two emerging areas of professional interest. I now would like to welcome our CP committee chairman Satishji Gupta, and I will read out this. I will let you know all about the profile of Satishji.
छोड़ दो sir Ashok ji. You give me chance to speak first.
Yes sir. Sir, please sir. I welcome and I request Satishji to give us few words of wisdom.
Thank you Ashok ji. Thanks a lot. My dear brother, younger brother, CA Pulkit Khandelwal, a very knowledgeable chartered accountant. In this young age, he is doing great work, great for profession and fraternity. And other speakers from Kenya who will join later. Ashok Jethaliya ji, my brother from Bhilwara, doing very great in Bhilwara. And Ajit ji, Secretary CP Committee, doing wonderful work day and night. CP Committee team and team technical, and my dear friends who are joining this webinar in a very large number. Welcome to each one of you. Friends, as a chairman of the CP Committee, I would like to thank you for your continuous support, for continuous suggestions, feedbacks on various issues regarding CP. Friends, this year in CP committee, we have undertake two things, that we will provide the quality and we will make the CP program available to the last chartered accountant of the remotest corner of country. For availability, we are forming various CP chapters, CP circles, and CP groups, which will take care of the CP programs. For the quality part, we are working 2-3 types. One thing which we are going to implement this year onwards, friends, that no CP credit will be available to the member if he does not attend the program, or the credit will be available for the time for which he or she attends the CP program. To do this work, we are taking the help of technology, and with the help of geofencing, we will take the every 30-minute snap of your mobile phone, and according to which we will provide you the credit. So we are working on this, and with CP committee is working a lot for this work, and we are hopeful that by the end of September we will be in position to implement this particular our initiation, and that will take care of the quality of the programs. Second thing which we are working, that we are inviting the interest of our members to become the faculty in the webinars or in the CP programs, for which we have received several interest, and we are working on all those interests. And believe me, friends, this will make it possible that every program and ensure the quality. So we are taking these steps as far as the CP, our I think our initiation regarding quality and the availability are concerned. I would like to say one more thing to you, friends. CP is the, I can say, breath or the growth of the profession. If you don't attend the CP program seriously and diligently, then definitely there is a loss of the quality in the profession. Friends, one more thing which I would like to say, that CP, physical CP hours are only mandatory for the non-senior citizen chartered accountants having COP. Only one class, non-senior chartered accountants having COP. Otherwise, all other members may do their compliance by attending unstructured CP programs. So, and that too, we are have to do only 20 hours CP credit physically. Out of that 20 hours, we can take 4 hours from the digital learning hub. So there is only 16 hours physical CP program requirement for a chartered accountant who is not a senior citizen and having COP for in a total 12 months. So that is not a much requirement. 1.5 hour, less than 1.5 hour a month, you need to attend the program. So take it very seriously. Yes, friends, I am apart from CP committee, I am also heading this year the UDIN directorate. And in the UDIN directorate, we are going to take 2, 3 new initiatives. One, I think, has been online, and you must be evidencing that we are asking few informations regarding the your audit report, whether you have qualified or whether it is a clean report, whether it is adverse report or any EOM is there or KYM there. We have started this, and two other things which we are thinking to initiate very soon. One is that no member would be in position to sign the 61st tax audit. There will be no UDIN generation for 61st audit. And secondly, that the member would be in position to know the name of the subsequent auditor in case of any audit which he has performed in the preceding year and is not aware about the succeeding auditor. I think you would love and welcome all these new initiations in the UDIN, and you would also love the initiation of the CPE committee. But what we need, friends, we need your suggestions, we need your feedback, we need your grievances, whatever you have. So please don't hesitate in writing a letter to the CPE committee or to the UDIN directorate or any other work of the ICI to me personally or to the respective committee. And I believe me that this year the council is working proactively for the interest of profession and fraternity. So thank you very much, friends. Thanks a lot. And I think this today's webinar will definitely be a milestone for all of you. Over to Ashok ji. Ashok Jetli.
Thank you, sir. Thank you for elaborating about the professional new opportunities and whatever the ICA has taken the decisions. Now I request, now I'll call on the first session. We'll start our first session, technical session on GST. CA Police Khandelwal ji with us. He's from Jaipur. He's renowned consultant and serves various corporates and MSME all over the India. He has working experience with entities like ICICI Bank and VKRT and company LLP. He is also a qualified company secretary, law graduate and certified in GST and NPO by ICA. He is celebrated speaker on GST and has delivered sessions on GST at various platforms like public, private, and government forums. He is regular speaker at various institutions like MSME training centers, regional training institute, AG office, ICAI, ICSI, IIM, FIEO, and WTC. He is regularly invited by various trade associations, banks, and other education institutions for sharing his expert knowledge. His passion for sharing his knowledge and expertise has enabled him to deliver more than 450 sessions on GST and other indirect tax topics. Now I request CA Puneet Khandelwal ji. Now, sir, this time is yours. Please start, sir.
So, a very thank you so much, Ashok ji, for such a warm introduction.
Thank you,
And
sir.
a very good evening to all the members present in the meeting. First of all, I would like to thank CA Satish Gupta ji, Chairman CP Committee, for giving this opportunity, and the CP team for such a wonderful coordination for enabling this, this session. And again, I would like to congratulate Satish sir for his visionary leadership, which we have seen in earlier years also, and he's continuing his leadership in years to come. So the topic that has been assigned to me today, uh, recent critical issues in GST and the trends. So I would like to tell you all these keywords of the topic, whether it is issues, whether it is trends, uh, recent, all these topics fit perfectly in the ecosystem of GST, how GST has been implemented and what are the things, how it has been taken forward. All these terms fit perfectly. So before jumping on to the discussions, I would like to share my presentation over here. Okay, so I hope my presentation is visible to all of you. Okay. So the journey of GST since the day it was launched and today when we see, it has been a roller coaster ride. We have seen many things changing, new notifications and circulars, and the amendments in the law and the rules and the procedures coming in, taken out, and again being modified again and again. So when I talk about issues, I would specifically focus on the issues pertaining to the admissibility of input tax credits in GST. So there are various issues which are open, which are not yet resolved, and again it will take time for the GST ecosystem to settle down all these issues which are prevalent across the nation. Specifically, there are few issues that more or less pertain to ITC. So ITC has been a critical thing in GST as of now, and the problems are going to increase. Why I say the problems are going to increase is the reason that the government and the revenue authorities are focused on tracking the input tax credit claims of taxpayers. They are very much focused and very much determined not to allow any single penny of ITC which is very legitimate, which is not very legitimate to the taxpayer. So they are keen, they are focused to track down and to stop passing on that ITC to all the taxpayers. That is the reason they have tried to make such a framework so it is to restrict that flow of ITC. So earlier it was seamless flow of ITC, and now it seems to be less flow of ITC. So I will take the discussion forward from the few provisions of Section 16 of CGST Act. Section 16, subsection 2, there are few clauses that govern the admissibility of ITC. The eligibility, the admissibility of input tax credit will be governed by these clauses. If any ITC does not testify in this in any particular clause of this subsection, then certainly that ITC is not admissible. So clause A, I'll discuss a few points over here and I'll then move ahead. The clause A pertains to possession of tax invoice. So this sounds very simple that a taxpayer need to have a tax invoice so as to make a claim of ITC, to have that claim of ITC. Now, is that so easy? Is it only that document, that piece of document, which is called as tax invoice, which we are concerned about? So certainly no. We have to drill down Section 31 along with Rule 48. Section 31 talks about tax invoice. So I'm sorry, I have a bad throat today, and I'll keep sipping some water throughout the session so as to give you a proper presentation. we have to discuss section 31 over here. Section 31 talks about tax invoice. Now, this section has to be read with Rule 48.4. What Rule 48.4 states is about an invoice reference number which is supposed to be generated by a particular class of taxpayers, which we commonly called as e-invoice. Now, if a tax invoice is supposed to be a e-invoice, if a taxpayer falls into a category, a supplier falls into a category whereby he is supposed to generate a e-invoice against a particular tax invoice which he has issued, and somehow he did not generate that IRN number, and he sells any particular product or service to his buyer, who is the recipient over here. Now, recipient bought that goods or service from that supplier. He has a valid tax invoice issued by that supplier, a tax invoice issued by that supplier, but the tax invoice does not have a IRN over here, and he has paid the money to the supplier. Now, going by that clause of section 16, will that recipient be eligible to claim that ITC? So my humble submission over here is no. Reason is that tax invoice is not a valid tax invoice as it is not supported by a IRN. So IRN is mandatory. It is mandatory from the perspective of supplier. The supplier is not has not issued a valid tax invoice unless and until IRN is done over it. On the contrary, the recipient's claim of that ITC flowing through that document, that tax invoice without IRN, is not proper also, because the recipient's document, that tax invoice, is not a valid tax invoice as per section 31. So the clause A of section 16 simply says possession of tax invoice or debit note is mandatory. Now that tax invoice is supposed to be a tax invoice as per section 31, read with Rule 48.4, meaning hereby that tax invoice is supposed to have a IRN over it. Now here arises the need for professionals like us to check whether the claim of ITC which our client has made is supported by a tax invoice issued with IRN or not. Do we have functionality to check that? Yes, definitely we have that functionality. You can simply go on to the invoice portal. You need to mention the supplier's GSTI number over here, and you will be able to acknowledge, identify whether that supplier is supposed to generate IRN or not. Now, in case that supplier is liable for issuing a IRN, then again, your ITC of your recipient, your client, is at stake, because that invoice doesn't have IRN, and definitely it is not supported by a valid tax invoice because it is without IRN. So we need to check, we need to audit those documents also which are flowing from the supplier, although it is non-compliance on the part of supplier, but it is somehow affecting the claim of a recipient, the claim of ITC of that recipient. So this is the first clause that I wanted to discuss. Then the prevalent issue, where the revenue authorities are issuing notices like anything pertains to the mismatch between the claims of ITC made in GSTR 3B versus ITCs which are reflecting into GSTR 2A and 2B. So in these kind of mismatch cases, we have got some relaxations. Earlier, the board has issued two circulars. One was to cover the ITC mismatches, which were from 1st July 2017 to 8 October 2019. Circular number was 183. It was issued for giving a process so that the mismatches which pertain to ITC claims made in 3B and those entries which are reflecting in GSTR 2A for that particular period were addressed. So they had asked to submit few documents by the recipient so that validates the ITC claim which they have made. The documents were a declaration from the supplier, GSTR 3B copy filed by the supplier, the mention of those errors and glitches which has been done by the supplier in his return, and a CA certificate wherever it was required in that particular threshold limit. So these were the documents which were required to get relief under section circular 183. Now, there are few categories of taxable persons who haven't been benefited from this particular circular. Those are those set of recipients whose suppliers are not traceable or not reachable. So they are not in a position to produce that declaration required from the supplier, because the relief from circular 183 can only be availed when the supplier gives a declaration to the recipient, and that declaration states that he has made certain errors while filing his GSTR1, so that he could not mention that particular invoice properly in his GSTR1, and he has paid tax to the government by filing GSTR3B. Now, in those cases where the supplier is not reachable, there are cases where transaction of purchase sale were very, very limited, maybe one or two transaction across the year, and those suppliers and buyers are not in frequent contact. Those cases are the leftovers of the circular. This circular does not benefit them. Another category is of those suppliers who haven't filed their GSTR 3B as of now. So the rationale behind leaving this particular category over here is that government hasn't received the revenue which was supposed to come to the government out against that supply made by the supplier. But again, that bona fide recipient has been left out. He is not getting benefit under circular 180. Another category is of those cases where tax revenue has been discharged by filing form DRC 03 in maybe during any action done by Department of Search or Survey or anything. Fourth category is of those persons where CA certificate is not available. CA certificate is not available. Maybe the CA is not able to validate the claims which the recipient has made. So this particular category is not getting benefit under Circular 183. Similarly, another circular which was issued to cover the mismatches between October 9, 2019 to 31st December 2021, circular number was 193. That circular also does not provide benefit to a certain class of people. One thing which is important to note over here is that this circular is necessarily giving benefit only to those persons who have claimed the ITC within the limits of Rule 36.4. Now, this is surprising. We were told by Rule 36.4 that we can claim ITC to the extent of 120% during a particular time frame. Then this 20% limit was reduced to 10% and then to 5%. And Rule 36.4 stated that even if the mismatch is up to 20% of the amount which is reflecting in GSTR 2A, then also the recipient can go and claim the ITC of say 120 rupees in case 100 rupees is reflecting in GSTR 2A. Now the taxpayers are being asked under this circular 193 to justify that excess claim of 20, 10 or 5% which they have made while avoid Rule 36.4. So this circular is not giving any additional or extra thing which the taxpayer hasn't claimed earlier. The taxpayer just needs to validate that 36.4 rule ITC also, which he earlier claimed under the impression that he's allowed to do so under Rule 36.4. So this particular rule is not giving any benefit over and above Rule 36.4. 36.4 stated the window of 20, 10, 5%, and the ITC which was beyond this particular level, more than 120% of GSTR 2A, more than 110% of GSTR 2A has not been addressed by Circular 193 also. So this is additional category apart from those which were not addressed by Circular 183 also. So in totality, there remains a good number of taxable persons, the recipients who haven't been benefited by circular number 183 or 193. Now, what to do in such cases? We have few judgments in this regard. One important judgment is of Bharati Telemedia of Delhi High Court, which says input tax credit cannot be denied to the recipient for the default on the part of supplier. This is a very good judgment to seek relief under such situations. Another is Arise India, that too again of Delhi High Court, which also says that the purchaser could not be denied ITC for the violation of selling dealer. The most important judgment in this particular category and to get relief in such kind of case is of Suncraft Energy Private Limited, which is binding principle, which says that unless and until proper recovery proceedings are initiated against the seller, the buyer cannot be pressurized. The recovery cannot be made from the buyer, the bona fide recipient. So the non-compliance of selling dealer cannot become the basis to initiate any action against the bona fide buyer. This is what Suncraft Energy Private Limited says. If the selling dealer has not paid the tax to the revenue, ITC cannot be straight away recovered from the recipient. The revenue authorities will have to recover the tax from the supplier first, from the selling dealer first. As long as the purchasing dealer has complied with the conditions for availing ITC, that is possession of tax invoice, payment made through banking channels, and he has received the goods or services, ITC cannot be denied to him. In exceptional cases where there is any collusion between the supplier and the buyer, only in such cases actions can be initiated to recover the tax revenues from the purchasing dealer. So this looks to be a settled principle, and the judgment was challenged before the Supreme Court of India under SLP. That SLP has also been disposed of. It has not been entertained, although it was due to the monetary limit that it was not entertained by the Supreme Court. But whatever the reason there might be, that Suncraft judgment stands strong as of now. So we can take the benefit of that judgment, and we can always get our issues addressed of such mismatch cases using these judgments. DY Bethel, again one more judgment of Madras High Court, which is on the similar lines, which justifies the differences between GSTR 3B and GSTR 2A. Now, what should be the approach going forward? So, as per my understanding, from 1st January 2022, 2B will be the binding document, will be the binding data for ITC claims which are made by the recipient. The law has been framed in that regard. The rules have been modified to give necessary validity to GSTR 2B, which otherwise it did not had. Now that modus operandi is there, and thus I would say GSTR 2B has to be taken seriously going forward, and the ITC which is reflecting in GSTR 2B should ideally be claimed by the taxpayer in his GSTR 3B. Next is the ITC should not be restricted under section 38, although I'll just skip this for now and come back here later on. I would like to take rule 37A for the discussion first. This is a new rule which was inserted in 2022. A very important rule, and the revenue authorities have already started issuing notices basis rule 37A. When we'll discuss this 37A rule, we will be able to understand how the compliances made by the suppliers are affecting the input tax credit claims made by the recipients. The recipient may be a bona fide buyer, may have done all the compliances which he was supposed to do while buying a particular product or a service from the supplier. But somehow, if the supplier is non-compliant, if the supplier is not taking the compliances and is filing seriously, then it is going to impact the claim of the bona fide recipients also. This rule is a classic example of this particular scenario. we have we are very much particular now about the mismatch between GSTR 2B and GSTR 3B. We may be giving we may have started giving due regard to those entries which are reflecting in GSTR 2B, and we have avoided taking claims of ITC of those entries which are not there in GSTR 2B. So that GSTR 2B data is flowing from the GSTR 1 filed by the supplier. So supplier is certainly going to file GSTR 1 on time so as to ensure that GSTR 2B entry of the recipient gets reflected properly. But what about GSTR 3B of the supplier? Is the recipient supposed to trace the filing of GSTR 3B also? Whether the supplier has filed GSTR 3B or not should be the subject matter of concern for that recipient? I would say yes. The reason is this Rule 37A. Rule 37A states that the recipient will be liable to reverse the ITC which he has claimed from on a particular invoice if the supplier who has issued that invoice has not filed his GSTR 3B up to a certain date. The date is the 30th September of the next financial year, following the year to which that particular invoice relates. So, for example, if the invoice has been issued in January 2025, then the recipient should ensure that the supplier has filed his GSTR 3B before 30th September 2025. If he hasn't filed his GSTR 3B of January 2025 till 30th September 2025, then the recipient who has claimed ITC on that invoice will be liable for reversal. Their ITC will be liable for reversal. So suppliers 3B not filed by 30th September of next F5, recipient has to reverse his ITC by 30th November. Reversal has to be done in GSTR 3B and liable to be paid if along with interest. So interest is also payable under section 50 on such reversals. It can be reavailed when the supplier files his GSTR 3B. Now, problem with this rule is it lacks, as per my understanding, it lacks proper legal validation. How can a supplier, how can a recipient be made responsible for ensuring that the supplier files his GSTR 3B on time? Is it the duty of the recipient? Is the recipient supposed to know whether what compliances, whether on time or not, are being done by the by supplier or not? He has to be after that suppliers against whom he has taken goods or services, and to ensure that supplier files his GSTR 3B. It was fine to the extent it was limited to GSTR 2B compliance, because we were getting that GSTR 2B data instantly on our portal itself. We were not going outside our portal to know the compliances made by the supplier. But this Rule 37A is going beyond that. It is going beyond the portal of the recipient, beyond the compliances of the recipient. This rule makes it necessary for the recipient to give a checkpoint on the compliance of supplier. He has to ensure that supplier makes filing of GSTR 3B on time. Do we have that functionality? Although yes, we have that functionality. You can do that public search on GST portal. You can mention the GSTN number of supplier, and you can have that written filing table on the portal mentioning whether that 3B has been filed or not by the supplier. But see how painful it is. How, how am I supposed to do the compliances? How am I supposed to take my input tax credit, which ultimately is a legitimate claim of mine? This kind of framework is being made. This kind of limitations are being imposed so that particular ITC leakage to is minimized to minimum extent. ITC of the recipient has been made dependent on the supplier's compliance, and it includes GSTR 1 and 3B both. GSTR 1 can be verified by checking the supplier's GSTR 2B. That was fine. But now I am being asked to check the supplier's filing of GSTR 3B also. So I'll have to keep a check on the supplier's compliance also. That action of the supplier is affecting my claim of ITC. So Rule 37A has to be given due regard. Otherwise, the authorities are already on to work. They have started issuing notices to those recipients whose suppliers haven't filed GSTR 3B till date. Next is the issue of ITC disallowed to the suppliers if to the recipients if the supplier's registration has been cancelled with retrospective effect. So ITC was disallowed to the petitioner. There is a judgment of cargo traders in this regard. Very beautiful judgment of Calcutta High Court, which goes in favor of the taxpayers, where the Honorable High Court has stated that the registration of the supplier at the time of transaction was showing valid on the government portal, and the name of the supplier as registered taxable person was already available on the government data. So the buyer was quite right on making the purchases from that supplier. He verified, and without any failure on the part of recipient, the supplier's registration was cancelled, and that was cancelled ab initio. So that cancellation will certainly not affect the claim of ITC of the recipient. So this is a good judgment which can be used in such cases where notices have been issued to the recipients. In such cases where supplier's registration has been cancelled retrospectively. Next is ITC to be claimed within the stipulated time, section 16.4. This section 16.4 sounds to me very, very, it is a very, very interesting section. It restricts the claim of ITC to a particular date. It says the recipient cannot claim the ITC after 30th day of November following the end of the financial year to which such invoice or debit note relates. Now, such kind of non-compliances were done to a vast extent in the initial years when the GST was rolled out. Then we saw COVID coming in 2020, and the compliances got delayed unreasonably in case of certain taxpayers. They were helpless in making their compliances. So reasonable efforts were made. Despite that, they could not claim their ITCs on time. Various representations were given to the government, to the board, and to the authorities to give some relaxations under section 16.4, where extreme actions should not be taken for on those taxpayers who could not match their claims within line of section 16.4. But those requests went unanswered, and one fine day in last budget we have been given this section 16.5. Section 16.5 grants substantial relief for the ITC which pertains to financial year 17-18 to 2021. In the issue of section 16.4, ITC which has been claimed till 30th November 2021 pertaining to those years will be validated using section 16.5. This amendment has been made effective retrospectively from 1st July 2017. One important thing to note here is no refund. I repeat, no refund shall be allowed to those ITC, though that reversals which have already been done, or those payments which have already been made. So if any taxpayer was issued any notice for non-compliance of section 16.4, and out of for getting peace of mind or for any reason he has made that payment, he has reversed it, ITC will not be benefited with this section 16.5 coming in. No relief after financial year 2021 also. So to the extent the ITC is related to financial year 2021, the relief is there under section 16(5). Post that, no relief as of now. My next part of presentation pertains to ITC presentation in GSTR 3B. I'll take it up later on. I'll first come to IMS, Invoice Management System, which is a newly introduced functionality and which has been made effective on the portal from 1st October 2024. So although I will not go into very much detail of IMS, but I'll quickly give you some some pointers to ponder upon in this compliance of IMS. We have been given three options: either to accept, reject, or keep pending any particular invoice, debit note, or credit note which has flown from the supplier's GSTR 1, 1A, or GSTR 5 or 6 onto the recipient's end. So the recipient has to take any one of the three actions. He has to either accept or reject or pending. There is a provision of deemed acceptance of record. So if the recipient does not accept, reject, or do any action on that particular record, then it will be deemed accepted. Now, these deemed acceptance is fine to the extent it relates to the tax invoices or the debit notes. But this deemed acceptance is problematic in the area where the case is related to a credit note. So, if a credit note gets deemed accepted under IMS, then the impact is going to be that the outward liability, of the claim of ITC of the recipient is going to reduce, because the supplier has raised credit note which has been accepted by the recipient, deemed accepted, and therefore the recipient is liable to reduce his claim of ITC to the extent of amount involved in that particular credit note. So whatever action we may take, whether we take or not on the invoices or debit notes, we should for sure give a necessary check to all the credit notes which are reflecting on our portal. If that credit note does not relate to us, it has been reduced, it has been issued by the supplier just for reducing his outward liability, although it has no validation, no transaction has been done to that regard, then it is necessary to reject that credit note from IMS on time. Because if we don't do, it will be deemed accepted and our ITC is going to get reduced automatically in our GSTR 3B. So that is an important thing I wanted to highlight in IMS. For the rest, we may not go on taking any action, because if the invoice gets deemed accepted also, then it is in our hands. To the extent of to the level of filing GSTR 3B, we can reduce that ITC if we don't want to take it. Even if it is been accepted on IMS, we can reduce our ITC claim in GSTR 3B, but it cannot be done in the case of credit note. So that credit note compliance is mandatory in IMS. Then I would like to talk about few latest updates which have already been rolled out or which are supposed to get implemented very soon. One is hard locking of GSTR 3B. This is again a compliance related update which we are going to see on GSTN portal very soon. It will be made effective from July 2025 tax period. It was earlier proposed in October 2024 and it was supposed to get implemented from January 2025 initially. But it was relaxed, it was deferred in January 2025, saying that it will be implemented from a later date, and that date has now come. That date will be 1st of August, where the compliance of July 2025 will be affected. So hard locking provision will that data of GSTR 3B is going to freeze. The auto-populated data cannot be edited. It will become non-editable. And the taxpayers have to reduce their tax liability, amend their tax liability only through GSTR 1A or the GSTR 1 of the later period. So if the liability has been declared in GSTR 1, say for 100 rupees, then the auto-populated liability in GSTR 3B, which is 100 rupees, cannot be changed. So if the original liability is say 80 rupees, then the taxpayer only option with the taxpayer is to reduce that 20 rupees liability in the GSTR 1A, and only then he'll be able to reduce his liability in GSTR 3B. Otherwise, GSTR 3B data cannot be edited. That liability data cannot be edited. Now, this will be made effective for from July 2025 tax periods, and thus we are going to see this very soon. Next is filing of returns will be disallowed after 3 years from the original due date. This is a very important change because there are few instances where GSTR 1, GSTR 3B or GSTR 9, 9C in many cases have not been filed by the taxpayers till now for various past years. Now this restriction has come with the amendment which was proposed in Finance Act, that taxpayers shall not be allowed to file their GST returns at the expiry of 3 years from the due date, though the returns which are covered in this particular provision are GSTR 1, 1A, 3B, GSTR 4, GSTR 5, 5A, 6, GSTR 7, 8, 9 or 9C. This restriction will again be implemented from July 2025 tax period, and we can understand with this illustration the returns which cannot be filed after 1st August 2025 are tabulated on the screen. Those returns which are related to June 2022, quarterly return related to April to June 2022, and the GSTR 99C related to financial year 2021 will not be filed. You will be not be able to file those returns with effect from 1st August 2025. So this is a very important change that we need to know. We need to check in case of our clients whether all the previous returns have been filed. There is no pending GSTR 9 or 9C which are yet to be filed, because after this certain date we will not be able to file that. Another important change is the time limit for reporting invoices on IRP portal. This has been made effective from 1st April 2025. The persons who have aggregate turnover of more than 10 crores can generate invoices, e-invoices, IRNs, only within 30 days from the date of invoice, debit note or credit note. Post 30th day, that data dump cannot be used and that IRN cannot be generated. So this is again a very critical change where people are generating invoices in a dump after many months of the invoice date. That compliance has to be taken care of, and it is supposed to be done within the 30 days from the invoice date or debit note date or credit note date. Then one important change, mandatory input service distributor registration. So till now, the entities who have multiple registrations on the same PAN had two options to distribute the ITC. Either they could get the ISD registration done, or they could adopt the cross-charge mechanism to distribute the common input tax credits. But now, from April 2025, ISD registration has been made mandatory, and those entities which have multiple registrations on the single PAN must have ISD. They must issue ISD invoices and file GSTR 6 to distribute input tax credit across branches, so that the traceability becomes better and the reporting gets standardized. Another important change pertaining to compliance is generation of e-way bill, whereby multi-factor authentication has been made mandatory. This multi-factor authentication has been bought with the intent to give a further layer of security while generating e-way bill, and the OTPs will be sent on the registered mobile number for generating e-way bill. Now the problem over here is when there are multiple multiple supply mechanisms where a single portal is being used for dispatching products from various locations. There is a practical problem of this OTP. That OTP needs to taken again and again from that person who is handling that registered mobile number, and that OTP has to be circulated for doing that e for doing that e-way bill compliance. This has been made effective from April 2025 onwards. Another important change in the HSN reporting in GSTR 1, manual entry of HSN cannot be done now. We have to select the HSN from the drop-down box. Table 12 has been bifurcated in two parts, B2B supplies and B2C supplies. We have to report the HSN separately for those both kind of supplies. We can add product in our masters on the portal, and we can select that product name from the master. So that search box is implemented on the portal, and from that we can do the selection. So the HSN code description as per HSN code, UQC and quantity shall be auto populated when we select one particular HSN master. So since we are moving towards the end of the time which was allotted to me, I'll just quickly discuss the two important judicial pronouncements which has been given by the courts recently, and which are very important for the taxpayers. Be Braun Medical India Private Limited versus Union of India. The ITC was denied to the recipient because the supplier by mistake entered the GST number of a particular branch rather than entering the GST number of the correct branch which has actually availed the services. So it was mentioned, GST number of the Bombay office was mentioned instead of Delhi. So the Honorable Calcutta High Court ruled that in such clerical errors, when the transaction is genuine and all the tax is duly paid, this should not lead to denial of ITC, and the essence of transaction should be prioritized over technicalities. Now, this is very important because similar kind of things are happening across GST compliances which we are doing. We can see they are prioritizing these small clerical glitches rather than the essence of those transactions, and these kind of judgments necessarily give a direction to how the courts will look into those transactions when that litigation moves forward, when litigation goes to the above levels, to the court forums or the tribunal forums, how it is going to be looked by those honorable bodies. So the essence has to be understood rather than the clerical or the glitch which has been done. One more important judgment is of Star Yan versus State Tax Officer. Here, a order was issued and it does not had DIN number onto that. This is also happening across the field formations. They are issuing documents whereby they are mandatorily need to have DINs placed on those documents mandatorily. It is a mandatory requirement, but they are not generating those documents, and it creates doubts about the authenticity of that document. So whenever we get any kind of order or any show cause or any communication which is supposed to have a document identification number onto that, and it does not have, then we can definitely raise concerns about it. We can, ideally we should not be complying with that particular order or particular notice. We should not be responding onto that because it lacks authenticity. And this thing has been validated by Honorable Andhra Pradesh High Court in this judgment of Star Yan. So with this, I guess I have done justice with the time that was allotted to me, and I would like to hand over to Ashok sir for taking the things further. Thank you so much. Thank you so much for to the CP committee for this opportunity. Thank you.
There is some questions from the participants. We are having more than 700 participants that right now, and few of them has raised some questions. May I ask?
Sure, sir.
One participant from Jaipur, Kamal Kumar Parwal, he has asked related to FY 2018-19 SEC is receiving two e-way bill generated on single bill. How it is possible if generated it is by mistake due to the portal error? How we have to reply?
So you can simply mention the factual position over there. You can
Mhm.
write to them. You can mention that it is the technical glitch on the portal which has been done. Otherwise, it is not possible to generate two e-way bills on the same invoice.
Okay. There's one more question from Udaipur. Mr. Amit Jain. He is saying that there is three party A, B, C. A is located in Mumbai, B is located in Udaipur, and C is located at Delhi. B purchases goods from A and dispatched to C at Delhi. Problem here is B does not want to disclose to C where he has purchased from Mumbai, and that is from A. And now can we make the bill A to B to transport rail yard at Mumbai to transport to Delhi, and bill B to in Udaipur, and another bill will be made at by B dispatch from Bombay transporter rail yard and dispatch to build it to Delhi. Means he want to say that there are three different buyer seller, and he don't want to disclose the original supplier.
So basically, there's an intermediary in between who is buying certain from another state and giving delivery to a third state, right? So in
Right.
that case, what simply you can do when you, I'll explain it, on the practical, with a practical front. When you go on generating that e-way bill, you have four boxes over there. One mentions about supplier details. Then it says dispatch from. You have a column for dispatch from address over there. Then you have a buyer details column and you have deliver to column over there. So you can use that performer in your invoice also. What you can do, you can simply raise a tax invoice to your ultimate buyer, mentioning his location, mentioning the price on which you have sold, mentioning the address of delivery. You can mention your details from the on the seller part, and from the dispatch from address you can simply mention the address of the entity from where you have bought. So if you want to get certain goods delivered from Bombay to Delhi, then you can write dispatch from address of Mumbai and deliver to address of Delhi, bill from yourself and bill to your customer in Delhi. So that can be done without disclosing the price, without giving the invoice of that Bombay supplier which has been issued to you. You may not introduce that invoice to your buyer.
Yeah. Okay. Another question is from Mr. Anil Kumar. GSTR 3B filled with the due date, but GSTR 1 filled for the respective period after 1 year. Whether tax input will be available or not, matter is related to FY 1920.
ITC.
Yeah.
ITC will be available if you have filed GSTR
Yeah.
3B on time. I guess he's asking about GSTR 1 filed by the supplier. The supplier may have filed it later on.
Yeah. Yes. Yes. I think this will is the
So,
question.
so revenue authorities are issuing such kind of notices. But I see my understanding of the issue is a bit different. What department contents would not stand tall because they are saying that section 16 2, that clause which says that you should have you should have paid the tax to the revenue. So that tax is being paid whether later or sooner, it has been paid by them. Now the 16.4 limitation, that limitation applies to the recipient, not to the supplier. If your claim is within the timeline of 16.4, I don't see a problem. Maybe the department is not accepting that rationale right now. You can always raise contentions before them. Even if they are not agreed, let them issue the order. You go on appeal. I feel we'll get relief from the appellate forums sooner or later in this matter.
Yeah. Another question is from Bangalore, Mr. Rishipal. Sir, Rule 37A speak about the payment of consideration, not about the filing of GSTR 3B. Please clarify.
Yes, sir. Absolutely right. So, what other is the mechanism whereby the supplier can make the payment? See, if he has filed GSTR 3B, there is a reasonable apprehension where you can stay. Although, see what I discussed, I clearly mentioned, I doubt the legal validation of that Rule 37A itself. It says the payment or the compliance, whatever it is, should be made by the supplier, and if not made, then it is affecting the claim of the recipient. Is that valid? Am I supposed to be the person who should be after the supplier to check whether he has paid the revenue to the government? Is not government itself equipped to recover its revenue if declared by the supplier? Why they want to bound the recipient to go on after the supplier to make the payment, make him do the payment or to the revenue? So that fundamental problem is they want the recipient to claim ITC on the behest of supplier. If supplier is non-compliant, they are going to punish the recipient and not the supplier. So I don't understand this analogy. So again, whether it is payment or compliance, the at least for the sake of saying, I am saying this, even if that person has filed GSTR 3B and not paid the tax revenue, how can we as a recipient check it? We can always say in our defense that at least if he has filed, we have a reasonable apprehension that amount has been paid because he has filed. We cannot have access to his GSTR 3B, whether he has made payment or not. So even if they want us to know that payment is made, it is impossible to check as of now. If they make all the GSTR 3B of all the entities public and accessible to all, only then that 37A will be workable in true sense. Right, sir?
Yes, sir. The last question is there. Someone has purchased goods uh, in the month of April and May 2021, and some bill is wrong bill is coming in there. I think entered, taken the input. However, the supplier has wrongly filled the GSTR 1 mentioning some other party, and therefore the same was not reflected in GSTR 2B or 2A. However, in the month of September 21, in my GST portal, 2B shows the invoices of the April and May 21. That's corrected now. The same was not claimed as it will be legally wrong. I want to know whether based on the original invoice, I have claimed 100% ITC. So it is allowed or not. We have been served with the notice from the department. We have explained entire thing, but officer has served DRC 01A. What we should do now?
Sir, what was the period of original invoice?
April 21 and May 21.
And when it is reflected in GSTR 2B?
September 21.
September 21. So I guess your claim is perfectly fine. Your claim will not be impacted. At the most, they can ask they can ask you to pay the interest over it. Although till that time, before 1st January 2022, that two-way functionality.
I think he's saying is some other bill earlier reflected, and then September it's get corrected.
So ITC is
I
okay.
think
Then
ITC is already appeared. I think interest liability will not be around.
at the most, interest liability will be.
Most of the difference in ITC is there then.
Yes.
And some of the client has filled GST 9 but not yet filled GST 9C for 1920, 2021, 21, 22, 2023. Anything we need to do? Is someone is asking.
Sir, if applicable, then you should file GSTR 9C because these time limitation provisions are not going to let you file it later on. So if you haven't filed it, at least if it is mandatory in your client's case, then go and file.
Thank you very much, Pulkit ji, for elaborating the wonderful issues of ITC, which is being raised by GST department. All of us, we practice jargon, getting day by day daily notices of the 2B and 2A differences of this. Our most of the time is utilizing in this only. So
Right.
thank you for elaborating us with the latest judicial pronouncement and with the latest rules and amendments of this. Thank you on behalf of the CP committee. Thank you. Thank you very much, sir. Thank you. Right now we are having more than 900 participants over the year. Now we'll start now I'll request Chairman of Nairobi chapter, CA Kamal Kishore ji, to say a few words on this.
Very good evening, because we are 2.5 hours behind India time. So in Kenya it is afternoon, and in India it is evening. So very good evening to all the participants from India, and good afternoon to all the participants from Kenya. And first of all, thank you very much, Ashokji. I was listening to the very insightful speech by Pulkit Khandelwalji. Though we do not have GST here in Kenya, but it was really eye-opener and very insightful. So now, with regards to this webinar about opportunities in Kenya, uh, before I start that webinar, I would like to say that we are highly grateful to ICI India, the CP committee, for providing Nairobi chapter with this opportunity. And friends, today I take this opportunity to welcome you all on behalf of Nairobi chapter of to this webinar on the topic opportunities for Indian CAs in Kenya. Before I start anything else, I would like to recall that our ICI anthem, the and emblem of Garuda, they were taken in 1949 when a CA approached to see Sri Aurobindo and he gave the emblem of Garuda. Friends, Garuda has a lot of importance covered in our religious scripture, may it be Ramayana, may it be other scriptures. Friends, during the Ramayana, when Ravan uh, kidnapped Mother Sita and he was taking her to Lanka, Garuda saw him on the way and tried to stop him. At that time, Garuda knew very well that he will not be able to survive if he fight with Ravan. But he still fought with Ravan because he was of the opinion that if he does not fight today, then all his future generations will be called coward. Friends, Garuda gave his life to protect the pride of the future generations. The symbol of Garuda teaches us to continue performing our duties irrespective of challenges which we might face while doing our professional duties. Friends, today we have two esteemed speakers from Kenya. One is CA Satyamurthy sir, one is CA Kailas Kota. Allow me to give a brief introduction of these two esteemed speakers. The first one is CA Satyamurthy sir. He qualified his CA when most of us might not have been born, and he is very much passionate about the profession. He was born on 16th April 1948. He was born in Mumbai. He did his schooling up to SSC in Mumbai. He graduated in Commerce BCom from Sydenham College in 1969, and thereafter he joined K.S. Iyer and Company for articleship from 1969 to 1972 to become chartered accountant. During the same period, the examinations of Institute of Post and Works Accountant of India and Institute of Company Secretary of India were also completed. After working in India for 3 years, up to 1975, he moved to Tanzania to take up a job in Dar es Salaam. He lived in Tanzania till 1990, and he was very active Rotarian and engaged in many Rotarian activities for the benefit of the community. He came to Kenya in 1990 to take up a job in Nairobi. And since then, that is almost 35 years, he and his family is there in Kenya. And today he is the CEO of a reputed company called Catalyst Travel, actually, which was founded by Mrs. Satyamurthy. He was actively involved in Hindu Council of Kenya, which is the biggest religious body in Kenya, and he has held various positions in that position in that society, basically Hindu Council of Kenya. He was the vice chairman, and he is very active participant in Sri Ayyappa Seva Samaj, and he is currently a
This
trustee
meeting
there.
is being recorded.
He started Anandam program for orphans and destitute children. The program called Food for 1000 Children now take care of about 1200 children for the monthly ration in about 24 orphanages. Sorry, if you are not speaking, you can mute yourself because there is some echo. Thank you. This Samaj is also involved in other welfare activities such as education, wheelchairs for needy, and other assistance. And he is multilingual also. Friends, he not only speaks Tamil, but when he starts speaking Gujarati, you will feel as if he is a Gujarati, but he is from southern part of India. He is speak very fluent Hindi, much better than most other people who come from North India, including me. He also speak Marathi and he is also conversant with the local language, which is called Kiswahili. So this is about our first speaker. Before I hand over to our first speaker, I would also quickly like to brief about our second speaker. Our second speaker is also very senior and esteemed person in Kenya. His name is Kailas Mota, and he's a chartered accountant and co-founder of MSVL Group Kenya and Shivashri Realm India. He has got almost 30 years of experience in finance and administration and leadership across Kenya, India, and UAE. He is also a certified career counselor, international headhunter, motivational speaker, Bloomberg published author. As of now, I am aware he has already published 2 books of very reputed businessmen in the world. He has placed over 1000 professionals in 15 plus countries, mentored more than 500 students and professionals. Just one more minute I would like to take, or let's say 30 seconds. Friends, Kenya is a very beautiful country, and some of you might like to explore Kenya for career opportunity. But those who are happy wherever you are, I would welcome you all to visit Kenya. And it's a very beautiful country. It's considered like one of the heaven on earth, I would say. There are waterfalls, there are mountains, there are hills, okay, there are rivers, okay, across all part of Kenya. It's very green, okay. So whenever you wish you are bored of your work, please come and spend some time in Kenya. I can assure you, you will have a lifetime experience. And the best thing is that we have the great Masai Mara in Kenya, which is considered one of the 7 natural wonder of the world. And this is across hundreds of kilometers, and it is spread in 2 different countries. This part in Kenya is called Masai Mara, and the other part in Tanzania is called Serengeti. It's very popular and it is a lifetime experience. Now, without taking much of your time, I would like to hand over to Ashok ji to invite our first speaker, C. Satyamurthy sir.
Thank you very much, Kamal Kishore ji, to share my burden and introducing both the speakers. Now I will call upon Satyamurthy sir to let us brief on a new topic, next topic. Thank you. Satyamurthy sir, please.
Sir, you have to unmute. Yeah, you.
Am I audible?
Yes, sir.
Am I audible?
Yes, Satyamurthy sir.
Okay. Sorry, I think I was trying to use my other computer, but the video on, so I had to switch to this Mac. So I'll have to speak from where I am right now. Very good.
I think sir, network issues there. We are not getting your voice
To
clear.
everyone.
Sir, maybe you can switch off your video because there's a network glitch.
Jumbo and greeting.
Sir, we are not getting your voice.
Robi.
Kindly mute your video.
Is
Switch off your video.
the professional opportunities overseas. You're not.
So Timur sir, you are not audible. Maybe you can try from a different network.
Meanwhile, can we call Kamlesh Kailash sir?
Yeah, I suggest that we call Kailash Mota sir.
Yeah. Kailash sir, are you there? Now I
Ashok ji,
request.
I'm there.
Yeah, Kailash sir, can you start your topic, sir? Please, I
Yeah, I
admit
will.
you on behalf of sir. Please, sir.
Yeah, okay. What I'll do, I'll first start sharing my screen.
Yeah.
Uh, Satyamurthy ji, is it okay if I start?
Please go ahead. I'm afraid there's something wrong somewhere.
No, it's totally fine as of now, sir. So I guess sir should continue.
Yeah.
You want?
Kailash sir, please.
Yeah.
Please continue, sir.
Yeah, okay. Just give me 1 minute. I'm sharing my screen.
Yes.
I don't know what is happening.
Is my screen shared now? Are you able to see it? Yeah. Good afternoon, everyone. Firstly, I would like to thank our institute and the CPA committee for giving both Mr. Satyamurthy and me this opportunity to present about the job. I will be focusing on mostly on job opportunities for Indian CAs in Kenya. So I would like to begin by giving a brief background of my own. And I qualified as a chartered accountant in 1989. And between 90s, in late 90s, I had the fortune of being mentored by our former chairman, C.R. Bhupati, who was well-known faculty member in the institute in SIRC. So I had a training under him, and then I was the students chapter coordinator for the Hubli chapter of ICI between 96 and 99. And during that period, I was instrumental in setting up the coaching classes. And during that 6 batches, we had coached about 600 students. I was destined to move to Kenya in 99. And since 99, I have been working in Kenya itself. It's a 26-year journey. 15 years I worked in Kenya and Dubai as a CFO for a private group. And since 2015, I have been on to my own. I started my own consulting into headhunting, into recruiting, and we have clients spread across Africa and Middle East with offices both in Nairobi and Ahmedabad in India. Personally, apart from being a headhunter, I'm a certified career counselor, a motivational speaker, and as Kamalji told, I have 2 biographies published to my name. That's a brief introduction of myself. Now, coming to Kenya, now why should one choose Kenya? You see, like, this was the question that came to my mind also when I came to Kenya. I came in 1999. Satyamurthy ji had come much before that. Friends, if you don't know about Kenya, like our chairman told, Kamalji told, Kenya is a very, very beautiful country. But apart from that, the quality of the life which we have in Kenya is much better. One can have a work-life balance. I'm talking from a chartered accountant's point of view now. Now, in terms of your, there's a high potential of savings. You see, when we came to Kenya, I think the salary structures, Mr. Satyamurthy, correct me if I'm wrong, were very low. But currently, the saving potential are very high, especially if you're working as an expatriate. The companies, most of the companies take care of your housing, your transport. Some companies take care of your schooling also, apart from the annual airfare. This is all part of the package. And whatever salaries you get, probably it can be a net savings. The other reason why Kenya, because Kenya is the gateway to East Africa and as regional hub to many finance, logistics, and trade across East and Central Africa. So that's one thing why you can choose Kenya. Moving further, now talking about our own community, the chartered accountants community. Prior to that, I will talk briefly about the Indian community which is present. We have more than 1 million people of Indian origin staying in Kenya, Tanzania, and Uganda. The history of Indian origin goes back to about 150 years during the British rule when Indians started to migrate from Gujarat and they straight away landed to the port of Mombasa. So that's the root of Indian origin in Kenya. Now, as far as the chartered accountants are concerned, especially I'm talking of chartered accountants who would like to make their career, we have all the major big four consultancy firms. We have corporate, we have multinationals, we have SMEs where you can take up the roles. Now, as far as our own chapter is concerned, we have more than 100 members who are very active and we do a lot of events. So that gives opportunity for members to even participate in our chapter events as well. Now, what does a life of an Indian look like in East Africa? Now, I am broadening the horizon, not restricting to Kenya. Kenya, Uganda, Rwanda, and Tanzania form core of the East African communities or East African countries. Now, we have I'll give 2-3 major points. One is the cost of the living and the quality of the life, which is here in East Africa. Now, like India, Kenya also cater to all budgets. We have good housing opens which cater to all the budgets. We have good schools, international schools, and a few schools of Indian origin as well. Then, because the Indian roots in Kenya are very, very strong, we have all communities, whether it's Hindus, whether it is Gujaratis, whether it is Punjabis, all Indian communities have a strong presence here. Now we have temples, we have gurudwaras, churches, and believe me, the Indian festivals that are celebrated in Kenya, sometimes I feel are celebrated more religiously, more sentimentally, and in a much better manner than we really celebrate in India itself. So we celebrate all the Indian festivals, and irrespective of the caste, creed, or tribe you follow, everybody participates in the Indian events. Now we have a lot of, for those food lovers, we have a lot of Indian restaurants, and all the groceries from India are available here in Kenya. Now this is about the life. Now, as far as you want to come to Kenya, and what are the regulatory things you should take in mind or keep in mind? Now, in Kenya, we have the CPA Kenya, the Institute of Certified Public Accountants of Kenya, which is like the parent body for the CPAs who practice in Kenya. Now, those chartered accountants who want to come to Kenya and would like to going forward practice also, they are eligible to become members of ISPAC as well. All you have to do is to appear for, most of the papers are exempt. We only appear for 2 papers and we get a CPA degree, and subsequently you have to complete all the formalities and seek or get a CPA Kenya license as well, and you can practice. Now this is as far as the people who are interested in come down and do the practice. Now, in Kenyan immigration, we have got 2 or 3 formalities. Now, if you are looking for a short-term working, like say 3 months or 6 months, one has to apply for a special pass. Now, I'm highlighting these things so that you understand what are the formalities required. But in most of the companies, they take care of all these formalities if they hire you. So if you're looking for a short term, 3 months or 6 months, we have a requirement of a special pass. And if you're looking for a long term, we have got the Kenyan work permit, which a company can obtain either for 1 year or 2 years. The cost is approximately 1 million shillings, which is approximately $7,000 or $8,000. In most of the cases, the company takes care of the work permit costs as well. Lastly, if you are working in this country for continuously for over 7 years at a stretch on work permits, one is eligible to apply for a Kenyan permanent residency as well. Now, Kenyan permanent residency entitles you to stay and work in Kenya for your lifelong, except that you can't buy agricultural land and you can't vote in the elections. Apart from that, this is everybody who has entitled or who has a PR can stay here and work permanently. Now we have, as I told you, Kenya is the gateway to the East African and one of the headquarters where UN is. So you will find opportunities across the sectors for all chartered accountants. Now, if you're looking for working in fintech sector or in banking, you have opportunities. As I mentioned earlier, audit firms, all the big four and the midterm audit firms are there. So either audits or compliance services or accounting, you can work in this sector. Now, in the corporates, we have got two broad sectors here. One, we have East African headquarters or the African headquarters for most of the global multinationals, which are either into manufacturing or into services or into agriculture or into horticulture. Kenya is very famous for its horticulture and agriculture. It's a leading exporter of flowers to Europe on a daily basis, and there is a lot of scope, and many of our own members are working in these sectors across Kenya. Now, one major sector which runs this country is the private sector. Now, apart from the multinationals, as I mentioned to you, Indians originated in this country about 150 years back. So in the private sector, I think about 60 to 70% of the private sector is controlled by corporates which are owned by Indian owners, mostly family-owned businesses, which are sizable, which are both medium and very, very big corporates, and they are spread across in all the sectors, whether it is manufacturing, distribution, hospitality, education, healthcare, aviation, and other sectors as well. Now, apart from that, you have opportunities, chartered accountants have opportunities to work in NGOs and developmental agencies. One of the headquarters for United Nations, UNO, is in Kenya, located in Nairobi. So there are a lot of UN agencies which operate here in Kenya, and there are opportunities for chartered accountants to work based in donor-funded and non-profit organizations as well. Now, one thing I would like to share here, there are opportunities, but I think when Mr. Satyamurthy speaks about it, he will be able to highlight it. What I've been into recruiting for about 10 years now, and I've been hiring about chartered accountants, more than 100 chartered accountants in the last 10 years. I have placed them across Africa. Most of them, when they qualify as chartered accountants, they think they have it all. But there are certain skills which we require before you really get into this sector. It's my advice that you gear yourself with all the knowledge of ERPs, SAPs, or your systems knowledge, because many feel that Africa is much behind, which is not the case. I would like to say that Kenya is a lot of advanced, and most of the big corporates, even in private sector, are using SAP, either S4HANA or advanced SAP as ERPs for their own platforms. So make sure, apart from being a qualified chartered accountant, you have these skills, the technical skills. Then your knowledge about IFRSs and other things, you should be able to, this is one of the skills you should be having. But most important, which I would like to highlight, is about the soft skills. Most of the chartered accountants, I think we chartered accountants are very strong in our fundamental accounting, finance, audit, and related fields. But I have seen in the interviews where we fail most is our soft skill, especially when it comes to communication, and especially when it comes to communication in English, because Kenya is an English speaking nation. Like we have in Africa, we have English speaking nations, we have French speaking countries as well. But Kenya is an English speaking nation, and make sure your communication skill, your English speaking skill, and your other soft skill you're geared up with before you think of joining or working here in Kenya. Having said that, as an Indian chartered accountant, because I work closely with our own chartered accountants, the local CPAs, and also the ACCAs, we stand to have our training, the institute, the curriculum which we go, the articles training or the industrial training which we undergo, I think prepares us for any stressful or any pressure situation. So that advantage we do have. So I will then, along with these skills, now I would like, where most of you would be interested. Now, if you are looking to start in Kenya or any East African countries, normal salaries at entry level, it varies from company to company, from sector to sector. But here I have presented a small indicative. Now, if you're looking at a starting or an entry level, it can be anywhere between $2,000 or $2,500. Now, this salaries is a net salary after tax. I'm not talking of a gross salary or a CTC. So this one can be a benchmark for chartered accountants at entry level. Now, as with your experience, if you're entering this country with an experience of 10 years or 15 years or 20 years, now your packages will depend on the background which you come from, your educational levels, your experience levels, and the relevant experience you carry. It varies. Again, apart from the salaries, typical benefits which are offered to chartered accountants, expatriates in this country include the cost of the work permit, companies take care of. Housing allowances are either the company provides an accommodation or the company gives an housing allowance so that you can take care of. Medical cover generally is taken care of for the employee and his family. Annual airfare or once in 2 years airfare is given by the companies, again based on their own policies. Again, transportation, either a company vehicle is provided or a common carpool is provided to the employees. School fees is one concept which depends on companies. Some companies provide school fees to the employees' children, and some companies negotiate. So this is for a general idea you get. Now, the salary levels which I've told here in this presentation is an entry level. If you are having 5 years, 7 years, 10 years, 15 years experience, or you have worked in other countries and you want to relocate to Kenya, salary levels will differ. Again, salary levels is a matter of negotiation, but this is a general indication for a starting level I have given. Now, in terms of the growth here, either you can start off as a senior accountant if you're working in a corporate, senior accountant, or you can grow to a finance manager or a financial controller, or you can be a finance director, or you can be a CFO. Now, the scope is unlimited. It all depends on, as I told you, your own background, your own experience, the sectors that you have worked. Now, coming to the networking, where how you can enter here in this country. Now we have a lot of like recruiters, like we are into recruiting. So like us, we have more than 10 to 15 big size firms who do recruiting for various companies. Like we have more than 100 to 150 clients across East Central Africa and Middle East. So you can reach out to recruiters like us. I know in India also, we have a lot of big recruiting firms who cater to the recruiting for Africa. So you can look into that. Then you have LinkedIn, which is a very strong social media platform where most of the companies or the recruiters share their job opportunities. Then locally in Kenya, we have got platforms like Fuzu and Brighter Monday, where you can register. Like in India, we have got like Naukri, we have got here Fuzu and Brighter Monday. You can register yourself and you can get alerts of all the opportunities which are matching your background and experience. As I said earlier also, we have a very strong Indian community. So you can reach out to the communities socially, and also our chapter, the Nairobi chapter of ICI is very active. On an average, we have 1 to 2 events where members network, and we have more than 60-70% of the members who actively participate. Now, this is a platform for networking because most of our members either are working in corporates or in working in big four audits, or they are working in multinationals. So through these networkings, you will be able to get a breakthrough and you will be able to get your opportunities here. So I think I've tried to cover briefly. I know there might be questions on this. So I've just given my email ID here. So after this event also, if you want to reach out to me for a detailed clarifications, I should be able to address you personally. I've given my personal email ID. Or those of you who want to reach out to us, these are our India office and Kenya office contacts. You can reach out to us, and we should be able to assist you or address any of your queries that we have. So once again, I thank the institute and the CPA committee for giving me this opportunity to speak about the job opportunities for our members. And when I say members, it's not only for fresh chartered accountants. We have corporates like Airtel, and I would like to say one of our member is the group CFO for one of the biggest telecom company in Africa, which is Safaricom. One of our own member is the group CFO, and we have opportunities across. It can be for fresh chartered accountants. It can be those who are having 3, 5, 10, even those who are having 25, 30 years experience. And opportunities are there either in practice or in corporates or in NGOs. So friends, once again, thank you very much. I'm open to any questions. I think let's first see if Mr. Satyamurthy is ready. He can finish, then we can address the questions together.
Thank you very much, Kailash sir. I think you will be there for question answer of the members. Now request Satyamurthy sir. Sir, please unmute sir. Satyamurthy sir. Yeah, sir. Now you can take the session now. We welcome you.
Am I audible now?
Yes, sir. 100%.
Yeah, great. Thank you. Thanks, Kailash, for that great presentation of the opportunities. In respect of the job opportunities, I don't think I have much to add up to what he said. Maybe a few issues here and there. And good afternoon, Jambo, and greetings from Nairobi. But at the outset, I wish to thank the CPE committee of ICI for the initiative and efforts to organize this extremely useful session for the benefit of the aspirants and other professionals seeking opportunities overseas. Our profession has grown multifold in the past decade, both in terms of content and keeping pace with technology. The challenges have been immense, and I'm proud of our fraternity that we have not only adapted, but also adopted these changes to the level that we have become experts. I'm sure we have many of our CAs who are extremely well qualified as well as experienced in these areas. I can still remember my days of articleship and final examinations way back in 1971. Since then, the course content has changed very substantially. The quality of our CAs has not been diluted as we keep pace with the changes. The leadership of our institute deserves a big compliment and thanks for this achievement. Let me come now to the topic we need to address. What are the opportunities available overseas? I will restrict to Kenya and maybe to some extent East Africa. Having said that, I think Kailash has covered substantially the ground available in this part of the world. So one of the things I would like to add to what he said is it is extremely important to gather a lot of information and knowledge of the place that our aspiring CAs wish to come. From my 5 decades of experience or having lived here, I know there are very many who do get frustrated because they do not have adequate information, as well as probably the expectations are not met adequately. So before they ever come, it may be a good idea to get an information about this country. In fact, Indian news media has been I'm sure they very circulated a lot that has happened in a couple of days in our country. Yes, that's something that we need not discuss at this stage because as I said, it is very different from what normally happens in the country. So we now move to what the background of accounting profession in Kenya. Why I'm taking this issue is because all the professionals aspiring to come here need to know that Kenya as a country has advanced substantially in the area of accounting and finance. And we have a very, very solid institute called the ISPAC, the Institute of Certified Public Accountants of Kenya, which Kailash has amplified. And so there is no major dearth of CS here. The CPAs are quite capable of handling many of the functions that we would have done. What makes us so special, what makes us special as a chartered accountant from India is we come with some very specialized skills. As again, Kailash has pointed out, we need to know a lot more about what is happening in the world today. That makes us possible to be engaged for very specialized functions. And those functions are definitely not the routine ones. So again, fresh entrants to the professions, I think they should have at least 5 years of work experience in India before venturing to come here, because those 5 years will give them a lot of exposure on the professional front. And as he rightly pointed out, the soft skills that you require. Again, that said, this country has all the modern applications for finance management. And so what is required is the skills, special skills in those areas. Now, even to improve our own skills here in this country, we have been, the chapter has been conducting quite a lot of educational courses, including advanced Excel and other applications, which will make us more able to take care of many of the areas of work. So, and employment potential, as he pointed out, yes, exists. but provided we come with quite very special skills. The skill sets can vary depending on the size and requirements as decided by the recipient companies or the organizations. But it's always good to be equipped very well with the ERPs. And again, I don't want to repeat. Kailash has really amplified that very well. We do have some corporates, Indian corporates here who are operating for the past several years. You have the Tata, the Mahindra, the Kirloskar was here, Ashok Leyland, just to name a few. And more investment is expected in the coming future, thanks to the Kenya-India cooperation that is already happening here. So investment is likely to come, and along with that, skill requirements will flow. So there's an opportunity there. And the other areas where I would think that is very, very useful here to us as Kenyans is forensic area. If you are very investment banking is another area, management consulting, and risk management. So, in fact, there is a movement now to have, why not Indian chartered CA firms become one of the big 5 or the big 6? So that's an opportunity which I'm sure the council is already studying very deeply. And if that happens, many of our own chartered accountants will have opportunity to come here and show, take part in the skills that are required. So those are areas which I thought are very, very important for chartered accountants here. Opportunity exists, as he rightly pointed out, but you must have the necessary skills that are required. Gone are the days when, in the good old days when, say, 30, 40 years ago, it was quite not so advanced, but today, soft skills, everything is available here. So we need to be one up on the people who come with those skills here. The other thing that is happening is the younger generation of Kenyans do go overseas, qualify themselves, and come back with good qualifications. So again, there is competition in that area. So we need to be aware of that development, which is happening not only in Kenya, but also in other East African states, as well as the other countries in Africa, particularly South Africa. So on the other hand, you can, if any of our chartered accountants are ready with proposals for joining hands with our own practicing chartered accountants here who are CPAs, who also came in as expatriates at one point in time. There is an area where you can join hands with, again, beefing up their skills and their scope of work. So that's another area which you can look at. So barring that, I think there's not much to say. And if you're looking at Kenya as a country, yes, the potential is huge. We do have very high development plans. The government is working on those to increase the employment levels in this country as well as the GDP. So the contribution can be very substantial. So with that, I would like to say a big thank you to the CPE committee. And if there are any other areas of any questions, yes, both I and Kailash, we are happy to answer. Thank you very much. Asante sana.
Thank you, Satyamurthy, sir.
Thank you so much, sir.
Thank you. There is one question from one of the member from Bhilwara. He's asking from Kenya or East Africa, is there any work from home opportunity for Indian CAs?
This again, it depends on, you see, it depends on the companies. You see, like many audit firms also have this, but it all depends on company to company and case to case basis.
Sir, thank you. There is no much more question is with me, I think. Yes, thank you very much for elaborating about the Kenyan development of the government and the job opportunities in the practice areas. at Kenya. Sir, this is now time to finally conclude the seminar. I am thankful to all the participants across the world who joined more than 900 to listen to the seminar. I'm thankful to CP committee and also thankful to our own chairman Satish Gupta, who is taking care of this seminar. I'm thankful to the vibrant speakers of the today's seminar, very learned speakers, CS Puriji Khandelwal from Jaipur, Satyamurthy sir, and Kailash ji for sharing their views and benefit. I hope it will be benefit to all the members for their future opportunities. I am thankful to the Nairobi chapter chairman Kamal Kishore ji for giving us so much time. Also thankful to the CP team and CP committee for allowing us to hold this seminar. Thank you very much and goodbye and see you soon all. Thank you very much, sir. Thank you all the participants.
Yeah, thank you very
Thank you
much.
so much.
Thank you once again.
Thank you once again, Ashokji.
Thank you, sir. Thank you. Yeah.